What's up, everybody? Roger and Norv here. Today is March 14th, 2022. So we're going to do a few things today. We're going to cover several topics. We're not just going to talk about rates. We're going to talk about the inventory real estate side of things. Then we're going to highlight a loan that maybe you haven't heard of that's really, really beneficial that we just recently utilized. So we'll get right into it. So Norv, why don't you tell us what's going on with rates and the mortgage news in general today?
What's going on, everyone? So yeah, definitely, Roger. Rates have been continuing to tick higher, and we did not see much of a breather last week from the uptick that we had, and so it didn't markets kind of continue to go higher. And we have the Fed statement coming up this Wednesday at 11 a.m. And so that's going to really tell us what to expect down the line for the next few months and several months by just deciphering the statement from the Fed and seeing sort of where their stance is on the war and the impact that could have on inflation and the supply chains here. And so they're forecast to go higher. I think it's inevitably going to go higher. We're just waiting to see where all the chips fall, and that way we get to have better understanding as to where to gauge the overall impact. But higher is where it's headed.
Well, you guys heard it here first. Rates are going up. I mean, we've been talking about it for a while. The only way to curb this inflation, the only thing putting a lid is the war, but eventually the war will be over at some point, and these rates are just going to continue to go up. So Norv also did some research on inventory, real estate inventory. As you guys know, home prices are going insane. And Norv, tell us what you find, some numbers on inventory.
So down 50%, 48% precisely from February of 2020, and down 25% approximately from February of 2021. So, and then we'll have the existing homes numbers this Friday. So that'll be the real year-over-year tell. There's a Zillow report that came out that showed there was a 25% inventory drop from last year, but we'll get a confirmation this Friday as to what that number is. But all signs point towards inventories continuing to go higher. So the market is just becoming more competitive by just sheer nature of the inventory crisis, if you will, because it's really putting any kind of relief that people expected from higher rates on what normally would happen is the give and take on the market softening up. That's just not happening. So, who knows how much longer this can go on for, but yeah.
So yeah, this is going to continue to drive prices higher. And it's kind of a catch-22 because let's say you're a first-time home buyer, right? If you don't own a home, you're going up against 20 other offers. There's very few homes on the market. And on the flip side, if you're a homeowner, like Norv's a homeowner, I'm a homeowner. If we're homeowners, what I'm seeing a lot of smart homeowners do, because prices have gone up so much, they're pulling their equity out of their homes and putting huge down payments to buy investment properties. So now not only are the first-time buyers competing against so many offers and low inventory, you're also at a disadvantage because the homeowners that have owned a house for 2 years, 5 years, 10 years, whatever, their values have gone up so much that they're able to pull out equity, buy more property. So kind of if you're a first-time home buyer, it's working against you in multiple ways.
Definitely competition from all angles, from institutional to investors to regular first-time home buyers. And so the market is fully saturated and inventories aren't helping. And, rates are forecasted to continue to go up. So we won't see any relief. And I don't think there's, it's inevitable for rates to go up. So we can say with sheer confidence that rates in the twos are long gone, but threes are almost out of the picture too.
Yeah, so we're looking at probably mid fours, right, in the near future.
I mean, it won't take much. Yeah, it's not going to take much. We're almost already depending on FICOs, and I think that you're going to illustrate for some of our viewers, where we stand as far as current rates go on a 20% down program, but we're already up in that 4% mark, slightly above there, and any give from any peace talks, if they come out of the war, then we're waiting to slingshot higher. Is what it feels like is happening and needs to happen.
Yeah. So 1 week ago, we were at 3.99. Today, we're at 4.125. As soon as the war is over, we're expecting 4.5. So real quick, before we sign on, we're going to do a new little segment here. We're going to highlight a home loan program that we utilize for one of our clients. So I'm going to talk for a few minutes about the bank statement loan. So the bank statement loan is designed for business owners. So if you're a business owner, I'm a business owner, Norva's a business owner. We all know we take advantage of having a lot of write-offs. Sometimes you're not able to qualify for a refinance or a purchase because you have too many write-offs. The bank statement loan solves that issue. So simply put, the bank's going to take your last 12 to 24 months of bank statements for your business, average the deposits, and then take a percentage of those deposits as your income. So just give you a quick example. I have a client who owned a cleaning service, very big, successful cleaning service, does cleaning for large commercial properties and stuff like that. His average deposits are about $100,000 a month. So the bank deducts 50% for expenses, right? Just like every other business has expenses. So 100,000 a month deposits, 50% of that, which is 50,000, that's his income. So they deduct 50%. That leaves him with 50,000 in income. He was able to get a loan for $1 million. Minimum down payment is actually as low as 10 or 15%. On these programs, rates in the low 5s to mid 5s. Depends on your scenario. But if you're a business owner out there, you're looking to buy or refinance, and you've had trouble, let us know. We'd be happy to help you guys out, get qualified for these programs.
Definitely, Roger. Good highlight there. It's my favorite program. And there are a lot of different elements to it, but it's simply put, that's exactly the thing. And I love it. And, there's a lot more to discuss. So hopefully our viewers have some questions and they can feel free to reach out and we'll give them some more info.
Yeah, feel free to reach out, leave a comment. Hopefully we'll be back at least one more time this week after the Fed makes their announcement, let you guys know what's going on. Probably later in the day, maybe Wednesday, Thursday, or Friday. We'll let you know how things are looking. And thanks for watching. We'll see you guys next time.
Thank you, everyone.
Later.
Bye, Roger.